two segments that we have been focusing on. One is to understand the payment ecosystem, and I think between the panel, which was excellently moderated by Prabir and our panelists with all their great insights, and Sameer's wonderful talk. I mean, as a lawyer, I haven't thought about regulations the way you explained it, Sameer. I mean, truly fascinating. When you're running a business, I think you really get to see how each of these circulars, affect you on a daily basis, and you start interpreting them much more carefully at times than even lawyers do. Now moving on to the last panel, which is to look at innovations happening in the area of finance, which can completely transform and which in many ways are going to probably rewrite the rules of finance. We have with us Bala Parthasarathi. He's co-founder of MoneyTap, one of India's fastest growing consumer lending fintech startups. A man who has spent a good part of his time in the Silicon Valley ecosystem, co-founder of Snapfish and so on. So over to Bala now to introduce the panelists for our session on reimagining financial services, blockchain and big data, and for an exciting round of discussions. Thanks.
Yeah, sure. Okay. So I'm competing with samosas or? So first of all, thank you everybody for being here. And I want to give a big round of applause to Anand, Shivnath and the rest of the Carnegie crew for sort of putting this together. It's been a totally eye-opening session in many ways, in many dimensions. So thank you all for being here. So let me first start by introducing the panelists, and then I'll just sort of take a couple of minutes and give my own big picture view of this particular topic about reimagining financial services. And then we'll quickly move into a Q&A. And I have some questions, but I really like this to be sort of a very participative session. So shall we get started? All right, everybody is all charged up. I want to hear some spice here. All right, let's go. So I want to start by introducing Harjeet Toor. Harjeet is business head of microbanking, credit cards, retail and SME at MSME at RBL. Harjeet has done many things in his life, and he's going to talk more about what he has done at RBL, which is one of the most, not only India's one of the fastest growing banks, but also one of the most progressive banks, and just they really get it in terms of one of the very few banks in India who understand technology and understand innovation at a very sort of deep level. Next, I want to introduce Satyen Kothari. So Satyen is the CEO and founder of Cube, and he's kind of a startup machine. Cannot seems to stop doing startups. It's like your serial entrepreneur. I think it's like your fifth startup. All right. So the word serial entrepreneur I don't particularly like. It sounds like a serial killer, but he's going to kill you with his ideas. Serial masochist. That's true. Satyen's big gig was Citrus. So I'm sure many, if not all of us, have used Citrus at some point of time or the other. And then I want to introduce Shinam. Shinam is a computer science engineer and CEO of PrimeChain. And it's a startup built around blockchains. So this is one of sort of the hottest topics. And I really hope she's going to shed some light on what this is about, because this tends to get very sort of technical and geeky, and most of us think of blockchain in a very different way. So this is she's going to shed some light on this. And lastly, I want to introduce Rohan. Rohan is a VP at Public Policy at MasterCard, and he has done a number of very interesting things in terms of policy. He was at APCO, International AIDS Vaccine Initiative, and HLL. So welcome, distinguished panelists. And let's get started. So the topic is reimagining financial services, blockchain and big data. So all of us kind of heard a fair amount about payments and UPI. And going after Samir, I don't think I can talk any more about UPI. He's like the master of it. So we all know a fair amount of activity happening in UPI and Beam and payments. I want to shift gears away from payments a little bit because fintech tends to be sort of largely associated with payments, and people kind of focus on it for good reasons. Payments, I think, is a central part of the heart of it, of fintech. At least it is today. What I want to step back and talk about is something that's sort of a little bit of a big picture. And I want to relate it to sort of my own sort of personal experience. So I grew up in Chennai, I went to IIT Madras, and I went abroad. I went to the Silicon Valley, just miraculously ended up there. And I was a part of sort of the pre-internet startup revolution. So by now I'm kind of dating myself. I think Shivna's introduced Samir as like the young entrepreneur. So I think I'm going to be in sort of the old entrepreneur category here. And so when I did my first startup, it was in software, and we were selling software in floppy disks and so on and so forth. And then in 1994, I distinctly remember, there was this company called, there was an open source organization called Mozilla, and it introduced its first browser. And then Netscape came. And I didn't know what was going on broadly, but when I downloaded it and I saw how it worked, I still distinctly remember it. It was sort of one of those hair-raising things. It's just like, oh my God, what is possible, right? At that time, I didn't know that I would be doing a startup, Snapfish and so on and so forth. But I knew that this was sort of a big moment, and something big and crazy was going to happen, right? And this is in 1994. And so when I fast forward to what is going on right now, and when I look at sort of the mega trends that is happening, right? So let's start with sort of cloud computing, right? So the price of computing has dropped so much that today we don't even think about it, right? When I started Snapfish, we used to be an online digital photo site, and the first terabyte of storage, 1 terabyte, believe it or not, I paid $2 million for it, right? This is sort of go-go days, and venture capitalists funding it. I don't know if any of you have seen the show Silicon Valley. Yeah. So I lived through it, right? So .com, we raised like $40 million on a PowerPoint and all of that. And so $40 million enabled me to buy like 20 terabytes of storage. So today you can get like 2 terabytes for whatever, 2,000 rupees or something. But the cost is, my point is this, the cost of storage and the cost of computing has come down so much that now you can almost reimagine and rethink everything, right? And then you add mobile along with GPS, right? Which again we take for granted now. This is the last 3 years. And then you look at big data and AI, which is just coming up right now. Most people don't even understand it. What we are poised to do in the next 5 years is sort of a complete overturning and rechurning of many industries. And the live evidence is Uber, right? So the biggest car rental company in the world is Uber, which didn't exist 6-7 years ago, right? The biggest content company in the world is not any New York Times or any magazine. It's Facebook. And it doesn't own any content, right? The biggest hotel company in the world is Airbnb, which does not own any hotels. So the whole world is kind of turning. And about a few years ago, people asked the same question. I remember this quote from the CEO of Lending Club, who basically said, like, banks are the next to go, right? Will banks exist? And there's a famous quote. I usually do a presentation with the quote. And about 4 or 5 years later, the price of stock price of Lending Club is about 5% of what it was when he gave that quote. It goes much better with the graphics when you see the curve going down. And the stock price of the banks have gone up, about 10x in some starting in 2008 to now. So there is something to be said about finance and banking that they're not going to go away, right? The Wells Fargo is getting stronger and stronger in the US, and you can see in the Indian banks as well. Indian private sector banks are doing pretty well. So there is something different about fintech. So the question is are banks then, immune to this? What is going to happen? And this is broadly the topic that I would like to discuss in the panel. And but we do know that some of these changes are coming, right? Cloud computing has made cost of computing so cheap that it's almost free. Mobile has made access so much that you don't necessarily need to open up branches to access And the user expectation, thanks to PhonePe and other apps, have made it so simple that people expect tap a button and then get stuff. Definitely you should be able to get financial services. If you can, Uber can give you a taxi in 5 minutes. You ought to be able to get money in like 2 minutes, right? It's not that hard. So some of these things are coming, and that's what this panel is going to be all about. So with that, I will turn it over to Harjeet to say a few words about how a banker looks at this whole thing. I think Harjeet is probably the only banker, one of the few bankers in the room today. So over to you, Harjeet.
Yeah, and thanks, Bala, and thanks for saying that we're not going away. Because till now I was thinking that it's curtains for banks. But yeah, I mean, the objective of banking I don't think is changing and is neither going to change. The fact that we need to get give access to more and more people across the country, across all the products and services in a viable manner still exists. The challenge so far was that in a country like India, brick and mortar was not making that possible, and it was extremely difficult to do. And today with technology, digitization and the rails being built, I think that is very much possible, and that's where the entire focus of the banking industry is. We believe information is going to get used in manners which have not been done so far, and therefore that's going to make credit accessible. And they were in the previous panel as well. CoinTribe did describe some of the ways that could be done. But I think from our point of view, one of the key to doing this is partnerships. And we don't believe banks can do it alone. And therefore it's essential that banks partner with fintechs and vice versa. I'm not a technology person, but I've been interacting with fintech companies for the last 1.5, 2 years. And there are two types, one which are absolutely open to collaboration, and the seconds are who think they can do everything else and just need a balance sheet of a bank to partner with. I don't know which one will succeed. I doubt if the second one will. But I think if you can collaborate and if the end goal is the same, then partnership does play an important role. We are learning a lot in terms of what fintechs bring to the table, which banks can't and I don't think will. And that to me is the critical piece.
Thanks, Harjeet. Satyen, would you like to say a few words about sort of your unique perspective?
So, quick introduction. The company I've just started is building a simpler, smarter banking service. And I think one of the questions we had discussed was predictions for 2017. I think it's going to be an incredible year of creative destruction. I think you're going to see a lot of startups that are going to come up, building up on top of the India stack and failing because they're not going deep enough to create a moat. It's really fashionable, easy to say, there's DigiLocker, there's UPI, let me start something. India has changed, right? 5 years ago when I started Citrus, a big IP point was that we had pipes into banks for net banking. And that was a big asset that we used, and we used to block out other people because we were blocked out by BillDesk and others initially from it. That pipe world has gone. You have UPI, which makes it easy for somebody to move money. But if you still have the mindset of 5 years ago saying, oh my God, I can access a bank account, I'm going to build a company around it, you're not going to succeed. So you need to add value on top that's significant. And I think what gets lost in all of this similarly is so much of discussion around tools that are used in fintech, like everything from blockchain to Aadhaar, etc. And what gets lost in the focus is, are we solving a big enough of a user problem? These are tools at the end of the day. Any layer of society in India doesn't find it easy today to manage their money, manage their payments, right? The amount of time and the effort we spend managing money, whether you're poor, whether you're middle class, whether you're rich, is just incredible. And so very few people are looking at it and saying, how can I solve it from a user perspective? We talk about data, right? And we talk about alternative lending, alternative scoring. It doesn't actually solve the user's problem because you're not looking at his entire life cycle and saying, how do I understand where you make your money, where you spend it, where you keep it? Once you have track of all of that, and by the way, the best guys place to do that are banks, right? If they start unifying their databases, you start seeing some serious magic coming together. So I think this year you're going to see layers coming up in the next, starting this year in the next 2-3 years, where you're going to have intense competition and collaboration. What I mean by that is there's going to be 2-3 banks out of the 90 odd that we have at the national level who are going to get it. That they need to open up their platforms, behave like a platform as opposed to a proprietary network. And that's the only chance they'll have for success. Not because a startup is going to beat them, because what I call the JAP consortium is coming after them. Jio, Airtel, Paytm, right? And it's coming after them. They treat the world from a software perspective. They treat the world as not making money on every transaction, but going after the big prize. Saying, if I have enough consumers, if I have enough data, I'm going to sell them products that are high margin. I'm not going to bother about that 50 bips interchange that I can suck out at every POS terminal, right? When I can sell him a line of credit, I can sell him insurance, I'm going to make so much more money on this guy. And we're sensing a couple of banks getting it. We work with some of them, but I think the ones who get it first are going to be incredibly successful. So banking doesn't go away, but it'll go away for a bulk of them.
All right. It's a bold prediction. So, so on that note, so Rohan, can you say a few words from, you're coming from a completely different perspective. You're running the world's largest sort of payment network. How do you look at all of this? And specifically, how does it tie into sort of policy and what policymakers should think about?
Sure. So, thanks, Bala. Second largest payment network, unfortunately, but notwithstanding. Just a couple of things. I think while we are sitting about 4 months odd into demonetization, suddenly the talk of every room suddenly become digital payments, which is, from our perspective, fantastic. We've obviously been doing this in about 200 countries now, but fact of the matter is, and I just wanted to draw back to the simplistic fact of the payments world, two things. Firstly, I think what is very important to remember from an Indian context, and I think with this whole sandbox approach that people are increasingly talking about, we try and globalize and not really localize in a fashion which Indians actually are very astute at doing, is that we're sitting on a count of close to about 80 crore or 800 million debit cards in India. Now that by itself, demonetization, no demonetization, is a huge measure of the financial instruments that are there, including to, thanks to PMJDY, including to the last mile. So in a way of what we are thinking, I think that here's the problem, and this is how I'd like to paint it, is we're about a 5 or 6% PCE in terms of digital payments. Now if you splice and dice that PCE, what comes out of it, and I don't think that stats changed tremendously in 4 months, is 90% of that is pure play ATM cash withdrawals. Now, if you really therefore look at where digital payments are in extreme nascency in a country like India, it's extremely suboptimal right now from even a critical point where we're talking about transaction cost, where we're talking about safety and security, but I think we've got a solid baseline to build from. The important fact, and I think from a policy practitioner's perspective, is also to say that, so one of the simple things that therefore should be done is, should we look at strategies to shift that behavior from ATM to POS first? We're not going to reinvent the wheel, firstly. Secondly, I think now again, if you look at this whole metric on saying that we were about 600 million debit cards a year and a half down back, and now we're about 800 million, the issues we are seeing in that additional 150, 200 million debit cards is that you created the supply without there being demand, right? And pulling back into what we should really as an industry be looking at is therefore if your underlying feature is a card which is really unique access to 50 or 60% of the Indians, how can we power that up in cool ways, right? I'm not saying that what I'm saying is, can I enable somebody to be able to walk with as much confidence on the street without carrying his card? And all he does is he has a virtual card in his phone which he pays for. We're a 300 million smartphone population. With the price point going down, I think there are opportunities there. And the last point, therefore, linked to this, I think, which is extremely critical, therefore, as we step into this less cash stroke digital India, is to say that, therefore, what are ways in which you can achieve that level of interoperability with the incumbents and the existing players to really drive innovation down to that last mile, which unfortunately is an area that I see very little effort coming in from as we look to digitize. So not to make the same kind of, or to take the same learnings we did from PMJDY and to really try and juxtapose that into a demonetization on steroids, what are the strategies we can collaboratively work with the government to deliver?
Excellent. That was a very good perspective. So, Sheenam, you go next. So most of us think of blockchain equals Bitcoin equals something sort of far out into the sci-fi. Educate us a little bit about blockchain and tell us where we should go with this.
First thing I would like to say is that blockchain, I think, is overhyped right now. So if I look at, I know
You're not
my
supposed to say that. You're
my
supposed to be the hyper.
company's business is running on blockchain, but I would say that it is overhyped. To be very frank, as a layman, if I look at it as a techie, it's just a database with a lot of strong features which are in. So there's nothing unique about it. Technology has to grow. Something has to come in. It's just that because of Bitcoin, it got too much of publicity. And first thing I would like to say, as this is about policies making, so I would say Bitcoin should be banned.
Okay.
Because you tell me one thing, which legitimate person would want to use Bitcoin? Anybody would want to use Bitcoin unless you were a tax evader or you want to buy drugs online. So everyone knows in the room that how drugs are being sold online today.
Nobody's going to admit it, so you might as well try.
Okay, so what happens is, so you go place an order online, or there'll be a youngster sitting in a coffee shop. You go to them, he has an iPad. You tell him how much drugs you want. He'll place an order on an iPad. You give him cash. Immediately, he will convert that cash into Bitcoin and make the payment. After a few days, a book will come to your doorstep. A book from a normal e-commerce site, so I would not want to name the e-commerce site. A book will come to your doorstep, and then you'll get a message with a page number. And nowadays, the drugs are colorless, odorless, tasteless. I have not tried, but yeah, because we've been working a lot with the police, so we know it. So they will just paint the paper with that drug. You just take that paper out, cut it into small pieces, put it on your tongue, and drug takes the effect. So that's how drugs are being sold online because of Bitcoin, because of virtual currency. So because of that, and virtual currency, the system, the Bitcoin virtual currency system is so strong, it is based on a technology called blockchain. It just happens to be a scenario. But otherwise, blockchain has a lot of other use cases as well. But I would actually want the hype to go down, because otherwise people expect everything can be, the entire system can be changed on blockchain. Blockchain is just a technology, not sort of a miracle that everything can be changed on it.
Okay, spoken like a good engineer. You're not marketing blockchain here.
This morning, everybody is talking so much about payments, and I was like, I'm waiting for technology to come in.
No, thank you very much. That was honest and refreshing perspective here. So one of the reasons why I got excited actually coming here is that, like I mentioned before, some of these technologies are kind of outpacing the ability for a normal person to understand like what is going on. Blockchain, big data, cloud, it's all kind of esoteric. Artificial intelligence is like really up there. Yet this really has a deep impact on financial industry, on banking, etc. And it's hard enough for sort of masters in computer science people to understand this. It's definitely extremely hard for like a normal person to understand it, or a policymakers. So one of the things that why I got excited when Shivnath and R.K. Mishra invited me to come here is that I think that I'm using the metaphor loosely, but Bangalore, which is kind of like a tech industry, right? Bombay, where the money is, and Delhi, where the sort of policy is, kind of need to sit together. I think there needs to be a Bombay, Delhi, Bangalore meet, right? In some way, right? And it's hard. I mean, it's hard enough for any of these two parties to talk to each other. Definitely the techies I can speak for, right? Because the tech speak and the financial speak are like completely different. And definitely the policy guys they're doing their own thing. So I'm glad actually this is in Delhi, and we have people like Harjeet and the people from the Fintech tech world as well as the banking world actually sitting in this room. So with that, I want to basically sort of take this discussion more into a Q&A kind of mode. And so what I would ask you, so Sheenam, will start with you. if you were queen for a day, what would be your top
For
three?
a day.
They could be forever. Depends on how many books you issue on e-commerce. If you were queen for a day, what would be your top 3 requests for the policy makers? Right? We're assuming you have unlimited power.
Only related to blockchain or otherwise?
Let's stick to blockchain. I mean.
Okay. So first thing, like I mentioned, the Bitcoin should be banned, I would say. And apart from that, I feel that there should be, there should be some sort of education between what is Bitcoin blockchain and what is otherwise blockchain. If you look at the scenario, there are a lot of blockchain fabrics available. It's not just one Bitcoin blockchain fabric which is available. So a lot of companies like IBM has come up with their own fabric. Ethereum is another fabric. So all these fabrics have different usage and disadvantages. So there should be something, there should be a standard, a protocol which tells you that, okay, this is the kind of system that you're looking at and this is what we can do. And apart from blockchain, I would say that currency notes above 100 should be banned.
Okay, that's a bold statement, ladies and gentlemen.
So I would say, because why would you want 2,000 rupee note, right? Because right now everybody is traveling. I came from the airport by Uber. I didn't need to pay cash. Paytm is there, MobiKwik, so many wallets are there. For every transaction, if I look at my Sabzi wali, she actually accepts money by wallet. She doesn't take cash anymore. So cash has so many issues. So I feel, first of all, this should be another thing that policymakers should do. And apart from that, I feel that now a lot of banks are very resistant when it comes to collaboration. So initially, everybody would say that, yes, we want to adopt a blockchain, but every startup is working with different banks. So, but last month, we came up with a consortium. It's called Bank Chain. So State Bank is as of now leading, but we have very limited banks as of right now who are part of this consortium, like ICICI Bank, Kotak Bank, DCB, Federal, Deutsche. The thing is that blockchain is something which everybody needs to adapt to. So for example, if I'm replacing a SWIFT system with a blockchain system, because blockchain, to be very frank, is not, it is hype. It is basically a simple, secure messaging system as well, right? So if banks want to work...
Explain, Shinam, a little bit about what a blockchain can do, because...
Okay, so if
we know what we cannot do. We don't want the...
So blockchain can't do something which is dependent on time. So for example, in between, stock exchanges approached us that if we can shift that entire system on blockchain. But that is not a perfect use case for blockchain. What happens is, in blockchain, it's like a chained block. So a lot of blocks are connected to each other via sort of in a chain, right? But it has a block time. So minimum block time as of right, which is possible in private blockchains, is 5 seconds. But if I talk about stock exchanges, they actually work in microseconds. So there is not a perfect solution for blockchain to be a perfect use case for a blockchain. But wherever you are using databases, first of all, it can replace the database, or it can work with your existing databases. But what it needs is, blockchain brings transparency to the system. Once any data which goes into blockchain, you cannot change it. I mean, I can append information in later stage, but I cannot change it. If I look at the current scenario, Bitcoin, which is as of now the value is around 50 to 60,000 if one Bitcoin is equivalent to, that mafia, the entire system, the entire technology is working on blockchain with so many criminals using it. It actually increases the trust in this technology. If they are not being able to hack it, I don't think anybody as of right now, the computing power which is available in the world, can hack blockchain.
I think the Russian drug dealer mafia cannot do it. I would say that's probably a good metric. So, Rohan, what about you? If you were king for a day, you have to stick to number 3. I'm sure you have 20 on your list. So, 3 things for the policymakers that you would like to see, sort of the big picture level.
Sure. So, I mean, 2, wearing my MasterCard crown. 1, as a public policy person. I think 2 important things, and I'll be quick at this, is firstly, I think really for a lot of discussions we've been having in a lot of rooms to see the reality of day, we need the internet for Bharat, which literally is to say that let's start with the simplistic, most important, and most most important thing, which will really launch the digital India. So I think the backbone needs to be strong. So I think firstly, the internet for Bharat, where I think the projections are about 300 million internet users by 2020. We're at about 120 million. So this literally shouldn't be a plan to 2020. If what we want to do in 2.5 billion transactions, which the Prime Minister announced recently, I think this really needs to be accelerated throughout. So I think that's one. Secondly, again, and this is more from a perspective from digital payments, is to say, Today, we are talking about UPI, we're talking about USSD, we're talking about BHIM, we talk about National Common Mobility Card, we're talking about Bharat Bill Payment System, we're talking about PPIs, their credit card, debit cards. I'm a really confused consumer. So I really think that for all it takes, if the government will take a recommendation to create a Ganesh, we'll all work towards that. But let's try not confuse the consumer, because what you're trying to do is create that seamless network which is interoperable across. And for all it means, if a product has different purses depending on who the actors are, that should be a product which should work across to really drive down digitization. And the third one, I think, largely from a policy perspective, which will really do a lot at a more macro policy level, is I think schooling linked to skilling is something which is extremely critical to be able to really provide that talent and that insight into at least complicated sectors like fintech, where we could do extremely well with the kind of workforce we are producing to create talent which we could not just make work locally, but also export out to create products from India for the world. So yeah, those three.
Great. Thank you very much. Harjeet?
Yeah, I'll kind of come down to absolute micro regulations. And this I'm coming from the fact that if the intention is to increase inclusiveness and therefore spread access, which means that physical interface needs to go away. And therefore, what are the regulations we need to change to allow that? I think a lot has been done on the KYC, which I think is good, but a lot still needs to get done on the customer consent. There is still an obsession with wet signature, which basically means you need a physical interface, and that comes in the way of spreading access. So that's something which we would want to be done. Can we get consent in various other forms is something which needs to be seen. I know that e-sign has come in, but e-sign is again linked back to Aadhaar with an OTP, and we know the penetration of mobile phones in Aadhaar, so that's an issue. Second is strong legal framework around defaults and recovery. So if I'm going to go and lend to small consumers across the country, today that is limited by the fact that do I have a collection infrastructure to be able to get that? And in the absence of that, this lending is just not going to work, because it's wishful thinking to say that we'll lend and they'll all be good consumers and everybody will pay back. So that's the second piece which I see. And the third is this entire piece about face-to-face. So somewhere in banking, face-to-face becomes extremely important. The fact that a bank officer needs to sign off on credit and therefore an algorithm cannot is something which needs. These are some of the things which one sees which comes in the way when you want to go completely digital through fintechs and spread the access. These are some minor glitches which I guess one needs.
Thanks, Harjeet. Super important ones. Satyen?
So if I was king for a day, this is fun. What's that? Prime Minister for the day. Actually, that reminds me of Kennedy's famous declaration in 1961, right, where he said, within this decade, we are going to put a man on the moon. And they did it, right, 1969. I think what we are missing in a way is, again, I come back to this, big, hairy, audacious goals as a country, right? We get so caught up into the details of how we are going to do it. And I think to Sameer's point, all the policy making is out of sync as a result, right? Because we don't know what we are all marching to solve as an ultimate problem. And I think if I was king, what I'd do is I'd say, let's identify 3 big problems that we want to solve as a country, right? And in the concept, in this construct of fintech, right? Let me just throw out 3 which I just noted off the fly. Goal number 1, we want 80% of the transactions in the country to be done digitally, financial transactions. Can't be 100%, let's be real, it's 80%. Goal number 2, we want 95%, or even in that, let's go crazy, right? 100% of all government subsidies to reach the final recipient. I mean, that's a fundamental right, that the government's spending and there's so much inefficiency and corruption. And something else that affects all of us, 80% reduction in paperwork in the country. Right? We have like stacks of warehouses full of KYC docs sitting somewhere because the bank asks you for KYC every 2 years. What I mean is, like, if you have 3 big goals, then you let the policy and the constructs and capitalistic behavior figure itself out around it, right? Incentivize the right kind of behavior. All the policy makers, all the multiple regulators get behind that and say, solve this problem. We are going to incentivize the guys who solve the problem, and the guys who don't solve it don't fit into the framework.
Excellent. Thanks. Those very good perspectives, all coming from different angles. How am I doing on time?
We have about 18 minutes for training.
All right. Good. So I just have a couple of good a few more questions that I can ask, but I want to pause here and I want to make sure we get people's participation and people asking questions. Does anybody have anything you want to discuss or talk about? Because you have excellent panel here.
Hi, I'm Meghna. I'm a researcher. So just in terms of just a couple of observations before I ask my question. I don't know if I agree with you about banning Bitcoin, because I think it's a very important experiment in terms of understanding the potential of blockchain and what it can do. And it's not hack-proof because, as we've seen with the DAO, it was hacked. But the beauty of that still was that if anyone used the money that they stole from that, it would be instantly trackable. But what my concern is from a policy standpoint is that while we have discussed finance a lot and we've discussed the banking sector, we haven't really discussed, I mean, there has been some discussion, but not a lot of discussion about how there will be this proliferation of internet access and how different regulatory regimes are going to be harmonized and how they would work with one another in tandem with one another, and how, or the problems that you as individuals face with regulatory bodies. And what solutions you look for in that space, like from a blockchain standpoint or a payment standpoint.
So just to correct you, in DAO, the blockchain was not being hacked. It was a bad contract. So blockchain is the underlying technology on which somebody had programmed a contract. So there was a fault in the programming part of it, not really the blockchain part of it. So it's like, for example, our banks are being hacked, wallets are being hacked, but it's not really the money which is being hacked, right? It is just a system which is using that money for transferring. That system is being hacked. So similarly, in blockchain also that had happened. Apart from that, from regulatory point of view, what I look at is there's a lot of this thing different about private blockchain and public blockchains. People don't really know the difference between blockchain. They think that blockchain means only the Bitcoin blockchain which is available. Permission and non-permission blockchain. And apart from that also, I can make it, I can give access to which all individuals I want to give access to. So for example, as of right now, we're working with a lot of banks. So all 6 banks are working as of right now together with us. So we have given one access to all the banks so that we can experiment about SWIFT system, MT103 standard that we've made on blockchain as of right now. So we have given access to all the banks at same level. So in permissioned also, I can set access. I can make an admin node and I can make a non-admin node as well. So as a regulator or as a policy, as of right now, for cybersecurity and a lot of other things, we have a lot of standards that we follow. For blockchain, we don't really have a standard as of right now. So I feel before everybody starts to implement blockchain in their systems, we need to have a standard built. What are the security aspects of it, as well as what are the monetary aspects of it?
Let me just interrupt for 1 second. I know you have a question. Does everybody understand what blockchain is broadly? And don't feel ashamed to put up your hands if you don't. Okay. So, Shinam, I think what you really need to do is to how would you explain to your grandmother what blockchain is? And I'm not age discriminating against anybody here. I'm probably one of the older people here. So, but give us a very sort of simple explanation, because I think
so everybody knows about databases, Excel sheets. You save data in Excel sheets.
No, probably that.
So when we use technology, we use databases to save information. Similarly, in databases, what happens is information is structured in tables and rows. So, for example, there's a serial number, and then there's a sequence of serial numbers. But what happens in blockchain is there's no structured data. So every information goes in a block. You can say a chunk of data which goes. After that, another chunk of data comes in. So it's, have you seen a chain? Everybody's seen a chain, right? So every chain has a loop. All the loops are interconnected with each other. So similarly, what happens in blockchain is, just presume it as a block of data. All the blocks of data are connected to each other using hashes. So it uses all those jargons of hashes, digital signatures for security angle, but basically it's just a chain of data in which presume the data is being put in the loops and all the loops are attached to each other.
That is a good visual. It's like a link chain.
It's actually like that. So it starts with block 0 and it keeps on going as a sequence number, block 1, block 2.
But not delete or break.
They cannot delete. So I can access the information, but I cannot delete the information. Because what happens is after I can set up a time. So for blockchain, I set up every 5 seconds, a block of information should come. Whether I have made any transactions between that 5 seconds or not, an empty block of data, but it will go. Block, for example, if I have to make change in a block number 20, and right now I'm on block number 100. So I have to go back to block number 20, change the information. Every time when information gets intact in a block, it gets locked by a hash. So if I make a small change, for example, everybody is familiar with hash. So hash means, for example, my name is Shinam, S-H-I-N-A-M. If I take the hash of S-H-I-N-A-M and after that I just make, let's say, S capital ki jagah small. Similar, immediately the hash changes. That thing happens in blockchain as well. So imagine there's so much data and then it gets locked with a hash. After that, if you make a change, hash has to change. After that, for that entire loop, you have to change the hashes. And within 5 seconds, which is the block time that I have fixed, it's impossible as of right now to change the hash. Looking at the computational power available. I'm not saying in future it can't happen. Obviously, we are increasing and technology is increasing and everything should be hacked, I feel. Otherwise, hackers won't be able to survive. But as of right now, it's not possible.
You're not making the regulators feel any more comfortable on this. But we get the idea of a metal kind of a chain where it's computationally impossible.
Yeah, it's like a chain.
So, Anant, you had a question. Yeah. Sorry, I just thought I would clarify on behalf of everyone.
So my question is relating to the future of artificial intelligence in banking. I basically come from this angle where you recently read about HDFC installing that humanoid inside the branch. And of course, lots of other solutions also, like AI being used for cyber security, fraud prevention, and so on. So where do you see artificial intelligence, both in terms of replacement of manpower and existing processes and so on in the banking industry?
Yeah, so the way I personally don't see use of artificial intelligence in the branch where you already have people. I think artificial intelligence can be used to solve simple queries in terms of service or explanations, which it has a big role to play. Second, we see customer acquisition coming to that. So your entire interaction with the bank or with any system, app, or whatever, if it happens through a chat form, which is intelligent enough, then I see that happening. So as of now, immediately, these are the two things which come to mind. Service and acquisition, I think it will have a role.
I'll make one additional point, and I think that's interesting, is because I think one of the areas we've seen artificial intelligence work well in the financial banking sector is on the fraud risk and safety and security of protecting the ecosystem, right? And that's just because by fundamentally it's a connected world. And when you have that level of connectivity, the one thing that we have seen real life results working along with bank partners that we have is how we do artificial intelligence on fraud scoring, risking, and trying to map trends in trying to preempt, and that's something that you might have seen and you might have heard around the Bangladesh heist. But I think that's one of the areas increasingly within the banking sector where there is immediate value for AI and technologies.
So I'll contradict a little bit of what they're saying. I'm a big believer in technology and especially the accelerating change technology is bringing, right? So whether it's artificial intelligence, Bitcoin, I think what we don't know, we don't know. But what's clear is that the amount of data we are generating and the amount of patterns you can recognize from that data are going to create, to start with, algorithmic-based decision-making. So that's not artificial intelligence. It's fun to talk about it, but there's a lot of decision tree-based, simple what, if this, then that statementing that you can make, which removes a lot of human need for intervention in a lot of processes. After that, once you have that raw data, right, you throw AI at it, and it's impossible to say it's not going to come. I think it's a question of whether we can put the right boundaries, almost ethical boundaries around what AI is going to do and what it's not going to do. I mean, if you just look at Uber, right? A 6-year-old company, one of the world's, it's going to displace multiple levels of industry, from car manufacturing to ownership to surface transport, insurance, everything. But think how it's evolved in the last year and a half, right? Self-driving cars. Next step, self-driving trucks because they bought auto. So that changes the whole commercial transportation. Now, flying cars, right? Suddenly you don't need to pave roads anymore. You don't need to have urban places which are parking, right? So tech changes so quickly in so many ways. Even the Bitcoin example, right? I just want to go back to that. I think there's a place for it, and you see it in countries like Argentina, like Zimbabwe, which have very weak fiscal structures and government structures where people don't trust the government's money, right? And that's when they're going to use it because they're saying, I don't want to be subject to crazy devaluation. Same time, there are going to be countries like India, China, United States, which will say, no, actually, financial control is a part of our policy-making control. We're not going to let Bitcoin take on. But can you leverage it for yourself, Bitcoin, blockchain, right? That subsidy problem. What if the government of India gave everything in India coins on your cell phone to anybody who's poor and put the color of money on it and said, you can only use this to buy fertilizer and pay school fees? You solve so many problems using the same construct.
Excellent. I just want to shift gears a little bit. Ask just one change of gears. We have 15 minutes. So, we're all sitting in a nice room here and, talking about tech and using Uber and all that. Obviously, there's the rest of Bharat out there with like different equation. And we have a government which has a different set of priorities. They're worrying about, tens of millions of people who need to be provided jobs. Everybody needs to be financially included. There's a set of challenges which are sort of in a different dimension. And if you want to avoid the same problems that US and the other Western countries which have had, where the sort of the East Coast and the West Coast elites have kind of gone off in one direction, and they're not able to get the rest of the population along with them, we have a different type of social problems, and we obviously cannot afford those. So, Harjeet, I want to start with you a little bit in terms of, because you are also heading rural banking, semi-rural, the challenges that you're facing with demonetization, microfinance, right? In terms of getting everybody else on board, technology is obviously a key catalyst, and we do see the smartphones coming, we do see the technology helping. But how do you see mobile, big data, blockchain, all these technologies, in sort of getting everybody else on board, as opposed to sort of an urban elite?
Yeah, so it's a great leveler if one actually interacts, and we deal with a lot of women borrowers in rural areas. So there are a couple of realities. One is the fact that they don't have smartphones. Second is that they are, whatever phones they have, they don't even know how to do an SMS, and therefore they use it only for making calls or emergency, and that's where it is. In an environment like that, I think stuff like, so while I'm sure we can use big data, we can put algorithms, stuff, but there are some basic levels which we need to solve first. I think those customers are intimidated by coming to banks. Their basic problem with banks is that if they were to enter a bank, they feel the banker actually talking down to them, and that's what makes them extremely uncomfortable. And therefore, we need to get that trust going first. And maybe banking solutions need to be brought down to the local kirana store or the service point or somebody who's one of them, where they're not hesitant enough of going and experimenting. And I think that's the rail we need to fix first and get them to trust. Because today, I mean, during demonetization, cash went away. A lot of us actually first tried putting it into disbursing the loans into the accounts. But the fact was they couldn't withdraw from the accounts because withdrawals were stopped, and therefore they were still stuck. So we said, okay, fine, we've now put it onto prepaid cards, or some people have just asked them to go and withdraw from debit cards. The reality is that they take a pin, they take the debit card, one guy from the village goes with 20 women, stand outside an ATM, and he has a list of all pin numbers, and therefore, and they don't know. I mean, somebody just withdraws 1,000, gives them 500. They will never know whether they had that money, they never had that money. They can't read an SMS. So I think there's some basic literacy which we need to get there. And then, yes, basis data, there is a lot of stuff which we can do, which access is there. But I think in the physiology of things, I think there's some basic stuff which we need to do before we get there.
Any? Okay, got it. Thanks, Harjeet.
So from a socio-economic and what was mentioned about Maratha, a lot of technology being talked about in every field. I work closely with the government, both the central and state. I'm part of Carnegie, so just disclaimer. Everywhere the discussion is about any of these technological interventions. How are they going to be impacting the job? Because a country of our size, with the unemployment rate or underemployment rate the way it is, I think any policy of the government eventually is going to look at that. So we heard about, of course, branches. You said that humans should not be replaced, cannot be replaced. But all this technology intervention, is it going to be job neutral, job positive, job negative? I mean, it'll be very interesting for us to understand so that we can speak intelligently when we speak to the policymakers about, for example, the outcome of this seminar today.
Yeah, I'll give you my view. Personally, we believe that I don't think technology is going to replace or bring down jobs. I mean, it's not happened so far in the last few decades. Some jobs cease to exist, but new ones come up. And I don't think, therefore, the total job population will shrink. But the type of jobs may change. So, for example, if AI comes in, I expect some call center jobs to go away. But I expect some advisory jobs to come up, I mean, in simple terms. And that's how it is. So I don't think we will be in a position ever to restrict technology because we are scared about jobs going away. But I think there are enough opportunities which will keep coming up.
How many of you have read that article around the elephant curve? Anybody? Yeah. Highly recommend you look it up, and I think it's actually one of the toughest policy questions that's going to emerge in the next 5 to 10 years. Because, again, I'll have a contradictory view to my friend here. I think you're going to see a whole social fabric fall away from the middle class, right? The class that was always promised that if you work hard, you'll reach somewhere. Because that's the kind of job that's going to go away. And it's a fundamental crisis, right? What do you do if you have an educated population out of which you only need a small percentage that is super specialized, and out of which a smaller percentage is capable of retooling themselves? You can have government subsidies which pull out the below poverty line to the lower middle class. The ultra rich will become richer. But that segment, I think, and many people way smarter than me have written about this, commented on this. I think it's going to become an ethical crisis. What do you do with the population? Because you can guarantee them a minimum income, but to do what? Right? Human nature requires you to work in general to achieve something.
Thank you. My name is Amlan. I'm a lawyer. I specialize in tech policy. Just a quick comment back on banning bitcoins. Just keep it very brief, but I take strong objection to that. I just want to chat out my reasons very quickly, because I think it speaks to our larger anxieties about new technologies. And what we do when we advise policymakers often is try to map specific policy objectives to tech features, right? And when I look at the blockchain technology, I see that it's transparent, it's decentralized, it's secure. Now, these are features that governments look for in many ways. So, and if then the argument is that it's a specific implementation of the blockchain technology with Bitcoin, which is scary, the analogy that I'll use is encryption. I'm sure a lot of people here are familiar with that. Encryption is a fascinating, important, useful technology. And the fact with technology is it can be used by good players and bad players, right? So if you use to take the example of end-to-end encryption, which is a specific implementation of encryption, it can be used by terrorists to communicate discreetly, and it's mandated by the government for payment system providers to use end-to-end encryption to secure their transactions. So my point is, short point is simply, before we advocate for over-regulation of new technologies, let us just think about what are the policy objectives we want to achieve, what are the features that certain technologies provide, and then on specific implementations of those technologies, just think a little more carefully before asking for them to be banned.
Are you for over-regulation?
No. I'm saying in India we should ban Bitcoin, but I'm not against the technology. I'm running a company which is completely based on blockchain. So I'm making solutions for banks and other companies completely on blockchain. So I say that blockchain has a lot of potential. But as of right now in India, see, one option is if government can monetize it. So in Switzerland, government has actually said that people can pay their tax for using Bitcoins. But in India, as of right now, we are not using Bitcoin for any other uses apart from doing tax evasion. So there are a lot of couple of coffee shops in Bangalore which are accepting payments in Bitcoin. So now you go to a coffee shop, you walk into a coffee shop, you pay in Bitcoin before the coffee has been delivered to you because Bitcoin takes 10 minutes time to get processed, that money gets processed. So now tell me one thing, there you are not being charged tax. So the coffee shop guy who's accepting that payment from you, he's also not going to pay the tax to government. I know nobody likes to pay taxes to the government, but if you look at the scenario, government runs because of the taxes that we pay. So because of tax evasion, you start using Bitcoins. So in a lot of countries, you can actually buy houses using Bitcoins. But there, government is monitoring the Bitcoin. In India, we are right now not doing monitoring part of it. So people who are using Bitcoins as of right now, the simple purpose is either to transfer money from our country to outside country or to do tax evasion. So I'm just against the fact that either government should monitor it or otherwise we should ban Bitcoin. But I'm not against the concept of virtual currencies. I would recommend actually RBI should start, like our country should have a virtual currency, I would say. So I'm saying virtual currencies should be there, but Bitcoin as of right now, it's being used only for illegal purposes. That's why I'm saying it should be banned. But blockchain is a technology that my company is working on. So I would not want government to be against blockchain.
I think she just thinks it's bad PR.
Yeah, it's a bad PR because a lot of people initially right now when we go and approach bank, they're a little positive about blockchain. But earlier, initially, when we started working on blockchain, I started my company in August. Before that, we had research for 1 year. So whenever you go for blockchain to any regulator or any bank, the first reaction would be, no, we don't want to come in the limelight. So as and when the consortium was formed for blockchain, it came in the newspaper. The second day, letter went to State Bank of India that what are you doing about blockchain? But if you look at the scenario, right now, everybody uses Facebook. But do you know which database it is based on? Do we actually care which is the database that it is working on? We don't, right? Similarly, blockchain is just a technology that banks can use it as a database. But because of Bitcoin, it got so much of hype and publicity that people think blockchains can do wonders. That is the only, I have a different perspective maybe.
Question for the panel on who owns big data. So the government wants everyone to adopt digital payments because they get taxes. You guys all want digital payments. We all want digital payments and digital transactions, so we get data so we can do lending and for profit, run for-profit businesses. India's tax saying now with consent architecture coming, the rules of the game are going to change yet again. So my question is, if payments doesn't make money and the government's going to take the MDR down to floor zero, if you don't own your data, how will you survive?
Why do I have a feeling you have an answer for this? Yes. So again, right, it comes back. You're asking the right question, absolutely, and it's a very fundamental question in the sense that if the data is flowing through multiple entities, but you can trace it with one unique identifier, what is the point where you monetize it? Where do you, kind of in the freemium model, give free transactions saying this is going to enable me to collect more data, to monetize it at a different point in the life cycle of that customer or that transaction? I think the ownership has always been a point of debate. I'm sure you've had that in your contract negotiations with Yes Bank, etc. At Citrus, for example, we always co-own the data with every merchant. We said, you do what you want with him. We are going to do what we want, as long as we're not selling the data to third parties. I think you're going to have constructs which come around that depending on the business model, right? So if you were in the advertising business, sure, you would not agree to the non-sell thing, but we were very clear that it's going to be a network effect. We lost a lot of customers up front, merchants, who said, no, you can't use our data to do a fast checkout on another site. Say, no, that's not how the play is going to work. For every customer who you get to us, the entire network effect is going to pick it up, and you're going to benefit from it. In the early days, 100x. Eventually, it was, what, 15,000x based on the merchants. So I think it's going to be a tough play to negotiate it out. The government, whether we like it or no, is sitting on top of all the data. It knows way more than I think any of us even anticipate, right? And you look at the NSA, one of my clients when I was in Silicon Valley was Cisco. And they built this technology called Ambiance. It was insane. It could put up a tiny receiver in any room where on the fly it was picking up your voice. And this was 2008, 2009, doing a keyword pass on it and throwing out key information, minority report style, to the NSA servers, right? That had to be the only customer for that kind of technology. Cisco would never admit it. But this is the stuff that existed a decade ago. So when you have data streams...
You're scaring us now. Harjeet, you want to make us feel a little bit better? Who owns the data?
So I kind of agree. I think if there is a partnership, then the data is co-owned. Okay, unless regulatorily there is an issue where data can't be shared. Otherwise, I think it is. But somewhere, I think the most fundamental piece is that today the customer unfortunately doesn't own the data, and I think somewhere we need to pass that back to the customer to say that I give the consent that you can use the data and therefore then basis that you use the data. So that's.
I think that's what iSpirit is trying to do. Sorry, yes. Any other questions? How much more time do we have? One or two more questions?
Hi, my name is Arjun. I'm a lawyer. Just picking up, this is a question for Satyen, and just picking up from your opening lines, that we've seen that the largest taxi company in the world doesn't own any assets, the largest hotels company in the world doesn't own any assets, but we haven't seen anything in the banking system. Is that because there wasn't ever any national taxi regulator or nationally hotel regulator, and it only exists in the banking system because there exists a central regulator which defines the rules of the game, and therefore it's not possible to break down the system as easily? Or, I think the second level to this would be, is disruption just a new business model, or a disruption an active disregard to certain existing regulations and doing your business because it promotes greater efficiency, and then the regulator coming around to realizing that maybe this is the new reality and this is how we need to regulate this going ahead?
Wow, that's a tough one, man. So I think fundamentally you have to treat fintech very differently from a lot of other industries because you're touching somebody else's money. And I think the regulator has a very important role to play to protect the end person's money, right? Because otherwise you have many bad actors who can mess this up. I think if you see examples, I don't have the answer right now for India because we are in a state of transition, but Europe has something called PSD2 coming out next year, which requires every bank in Europe to open up its APIs. Every bank has to open up its APIs, saying that this is inevitable. Let's get our act together and unify and in a way take a leading role even over the United States in using technology. And that's why you see some of the most exciting kind of bank tech companies are built in Europe right now, from Number 26 to Atom to Holvi, etc. The US actually just last week announced a new form of banking licenses. And of course that follows the RBI's leadership role, where this is going to open up license possibilities for the likes of Google, Apple, etc. to become sub-banks. So I think the regulator is an important part, and you can't compare other domains because you're touching people's money. But how the regulator starts moving in the right direction to enable and accept that technology, data, whatever you throw at it, is going to be an inevitable part of what's happening in fintech, right? The old way of doing things is super inefficient, full of friction, full of leakages, and tech is not going to stand by. The tech industry is not going to stand by and say this is fine.
Excellent. It's 5:10. I want to respect your time. Is there one more question you want to take?
My question to the panelists is about the perception what Dr. Gokan talked about. Now the whole financial technology industry is flourishing probably because there's a lot of liquidity flowing in the global economy. And it is what I call
in the boom phase, probably because everybody is drugged, from consumers to the people who are associated with the industry. For example, Uber has created a system where people have taken debts to buy vehicles and associated themselves, and now the industry is suffering from the withdrawal symptoms. Now, when we talk about the question of financial viability of the financial technology companies, once they start taking the economics seriously and try to become financially viable, the kind of backlash that might be expected, how is the industry prepared for that?
Not sure who this question is addressed to. Anybody wants to take it? Yeah, no?
Okay, so I think it was probably the elephant in the room which you touched at the last, but the economics of the model of how digital payments and how sustainable that is, to maintain the threshold is possibly where you're coming from. And I think it's been referred to in the past fleetingly in discussions, but one of the areas which is obviously a huge bone of contention with the government of India is this whole idea around MDR, right? Everybody speaks about MDR. You've seen a lot of coverage around transaction charges, as they're loosely called. Let me give you a little sense in where at least our viewpoint is on this. Firstly, I made this point in my opening remarks, is you are trying to put caps on an industry which is a sub 1% industry in India at get-go, which means that you're never going to let a market discovery for pricing come into this market. At 1%, it's impossible. I don't know of another market which has done it. One. Secondly, what the RBI already did in 2012 is they put in caps on the MDR. I think it was 75 basis points and a percentage point in that point in time.
Debit card transactions, right?
For debit card transactions. And again, I'm talking purely about debit because that's the demonetization driver, right? That's how it's been pursued. That's the tool to drive it, literally. And if you look at the analysis, and we've done some, I'm sure other people have done analysis to say what that did post 2012 to 2016 is merchant acceptance dropped, number of locations dropped, the transaction sizes dropped. Why does that happen? That happens is because what you don't remember fundamentally is that this is a four-party model and how this works in digital payments, right? And everybody in the ecosystem needs to have that incentive, and now more so, to be able to reinvest in developing that infrastructure. That's first and fundamentally the point. The second point, and I think this is again something which is at a macro level not spoken about enough, is that while you talk about the cost of digital transactions, the one thing that nobody talks about is the cost of cash. And I think that again is a huge prop component where the last estimates we saw was it purely cost the RBI somewhere close to about 22,000 crores as an annual cost just for cash, printing cash and maintaining the currency chest. Again, a report which I remember UID published, which was about 3 or 4 years back, which was shocking to me, was to say that it cost the government 3.65 rupees to make 1 rupee of subsidy transfer. So that's the inefficiencies we are dealing with. If digital payments literally were to live up to the promises which the government has made and you're able to create those runways, I think what you will automatically see is a downward spiral on pricing. And whether that pricing should be zero, which we're anyway talking about things like Aadhaar Pay coming in where that could be a possibility. And if you're talking about debit cards or cards literally diminishing from India by 2020, which I understand Mr. Kant referred to this morning, I don't know. Those are things that we need to see. But I think what I do know and what I do think should be done is to create the right kind of infrastructure for all players to then take an aggregated view on what is the right kind of pricing to be able to drive. And the last point I'll make to your point is that let's also remember in the pursuit of digitization that payments is not a utility business. So I think there needs to be incentive, and the incentive needs to be developed to be able to reinvest to creating that acceptance architecture in India.
Hey, thanks a lot. Do we have time for more questions, or are we done? So why don't we take the questions maybe perhaps offline? Absolutely. Thank you very much.
Hi, so I'll just close down the show today. Thank you everyone for joining us, especially our distinguished panelists, without whom a lot of these substantive conversations would not have materialized. We sort of go forward, if the challenge for the regulatory sector, for the government is trying to figure out how to do something that ensures clarity and uniformity of application, and the challenge for all of our fintech entities present in the room is to innovate continuously without sort of hampering consumer protection. Our challenge is how do you design a research agenda that's sort of substantive, useful, data-driven, and not sort of goes overboard with hype. So as we go forward, we'll be in touch with all of you to sort of help us generate ideas on how to best go about this sector. Some of our initial thoughts are looking at how do you go about designing soft touch regulatory strategies around emerging technologies like Bitcoin, digital wallets, even payment banks. And on the other hand, sort of looking at, is there any global strategies for financial inclusion that we can adapt in India, or are there sort of indigenous strategies that we have not looked closely at enough? So once again, thanks again so much for coming out, and a big round of applause for everybody that's joined us here today. Thanks.